And as always, we're going to be looking for accurate context, good risk management, and always exercising good patience.
Everybody who's traded has gone through periods of time where their strategy hasn't worked.
Where if not a hard stop, you should reevaluate the trades you're in based on time.
That's what we're here for, is to put ourselves in the best success. A trading routine does that, builds that habit, lets you know what to work on, what to reflect on, and what to improve on the next day.
Good morning, Futures family. It's time for the Market Prep. Thursday, the 25th of May. As always, we're seeking accurate context, looking and thinking about risk management, and always remaining patient in our trading today. My name is John Hoagland. Thank you for trusting me with your time. We have a lot to discuss today. We're going to get started right off the bat. Remember, today, 10 o'clock, the session with Jared Tendler on the mental game of trading. I've already put the link in the chat. I'll put it in later on in the prep as well. We also have Make Hoag Money putting in the link right there for you for Make Hoag Money right after the prep today. I apologize yesterday. If you were in group coaching, I lost internet again. Lost it for the better part of the rest of the day, so we weren't able to have Make Hoag Money or a reflection yesterday. My apologies. As far as economic numbers this morning, let's get down to business, shall we? 7:30, the GDP, the look number 2 at the first quarter GDP numbers came out. They were expected to remain at 1.1%. What the first look at GDP was, it came out a little bit better at 1.3%. It seems like the market that has responded the most to that is the euro and gold. Gold took a pretty deep dive from that. We're still seeing our equities mostly higher. The Dow is a little bit lower, but we've got the NASDAQ screaming higher after the NVIDIA release last night of their earnings and some guidance. As far as the GDP price index was expected to remain at 4%, came out at 4.1%. Jobless claims, both of them came out lower. They were looking for 250,000 initial jobless claims. It came out much lower than that at 229,000, and a slightly lower number for continuing jobless claims as well, just missing by about 6,000. At 8:50 this morning, we have Fed member Barkin going to be barking. 9 o'clock, we have pending home sales. 9:30, the net gas release, as well as another Fed member, Collins, speaking. That's it for our expectations for known economic numbers. Of course, we all know that the debt ceiling is still out there. Seems everybody has forgotten about that, at least for now. We've got U.S. stocks seeing a relief rally as the debt ceiling negotiations continue. The U.S. credit rating, Fitch, is now putting the U.S. credit rating on notice as negative watch. There's a little bit of a scare there. We're just they're, I'm sure, watching the brinksmanship that's going on between the negotiators for that. Stock index futures mixed again prior to the open and after the GDP numbers. They remain somewhat mixed. S&P and NASDAQ higher, NASDAQ screaming higher. The Dow still posting lower numbers, down by about 21 ticks at this point. The FOMC meeting minutes yesterday, I was reading through a lot of it, and it seemed like they were kind of like singing, "Should I stay or should I go?" You know that song, "Should I stay or should I go?" Members kind of weighing whether or not they're going to halt the tightening policy or continue or watch or whatever they're going to do. Who knows? Crude prices dropped overnight, back to a key level, that weekly kickoff level, after Russia cast doubt on potential OPEC plus cuts in production. So we've got all that coming at us. Lots to look at on the charts as well. As far as the VIX, the dollar index, and the 10-year yield, VIX down about 10%. 1904 was 1952 yesterday. Dollar index 104. It was 103.48 yesterday. So the dollar index up slightly this morning as well. The yield on the 10-year up slightly this morning as well at 3.75%. Yesterday at this time, posting 3.69%. As always, please make sure you hit the lucky like button, share, comment, question, feedback, heckling. Love are always welcome. Make sure you subscribe to our YouTube channel so you get notifications when we do go live. We see a futures trading today at the top of the list this morning. You win the prize, futures trading today. Shaw, good morning. Happy Thursday. Lacey says good morning to everybody. Rooster, Will, good morning. GDP is stronger than we thought. That link right under that comment by Will is the link to get to the Zoom webinar for the Jared Tendler session today. You will be able to ask questions. Jared will be there talking about a feature of his book, The Mental Game of Trading, and then taking questions after that. Snowflake, not the first one today. You'll get there. Pete, good morning. Matthew, good morning. Charles March, George Duquet, good morning. Orion, haven't seen you in a while. It's good to see you. Stephen, good morning. Alejandro, Scott saw and he conquered. Haggle Matters, good morning. Theo, I haven't seen you in a while. Theo, it's great to see you again. Hope things are going well for you. Brian, Will, the debt ceiling doesn't matter anymore, right? Woohoo, pass the Kool-Aid. It's what it seems like, right? Chad, good morning. I got lost. There we go. Jason, good morning. Luke, good morning. Jimmy Decker. Jimmy joined us for Make Hogue Money the other day. That was fun. It was good to see somebody coming in. We got Make Hogue Money today too, Jimmy. So you got the opportunity again. John, Andy, Nastic, Caesar, Rusty Golfer, my spirit animal. DA, Kevin Laffey, good morning. Good to see you, sir. Jason, Robert Harrison, good morning. Dan Trader, good to see you. Dimitar, Trading Research. Mitchie, buenos dias from Spain. Not pain, Spain. Good to see you, Mitchie. Bear goes long. It's Friday. Have a beautiful weekend outdoor, everyone. It is your Friday. Well, nice. Synthetic Friday for you. Don't forget, we are not trading on Monday. It is Memorial Day. Bear goes long. Yes. God bless our veterans. Good morning, Grounds Hero. Jason Blackwell, good morning. Denise. Henry, George, good morning. Lacey says good morning back. Shane, good morning. Stephen, JT, Gremlins returned, but now gone. You know what? It just, for some reason, I'm at the end of the line here for electricity, for gas, for internet, for cable, and it just seems that the last one on the line always gets the problems, it seems. Jason, good morning. Fed's preferred inflation gauge tomorrow, April core PCE. We'll be checking that out tomorrow. Thank you, Kevin. Alejandro. Yes, the cure. Should I stay or should I go? There you go. I should have played that a little bit this morning. But good morning, Melk, Per, Byron, Alfred, The Clash. Yes. Is it The Clash, The Cure? I can't remember. We got a lot to talk about here today. So Byron, dude, futures trading today. Let the prize be a dog treat and give it to Lacey. You got it. Lacey will be very appreciative of that. Dude, thanks. 25 years in the Air Force. Man, oh man, I salute you, dude. Thank you for your service. J-Man, good morning. Need to make Hogue money so he can pay for his internet bill. Yes, right. Chart language, good morning. Posse, what's going on? Crew, I already made my trade for the day at 7:53 for 54 minutes. Caught that downward slide, $4,900. Wow, that's a nice job. Clash, there you go. Chart language, 869. All right, so we've got some traders already making some money this morning. Always like to see and hear that. I am one that does not necessarily trade very often before the regular trading hour because I'm sometimes a little busy. Huh. My nephew hung out with him several times. Wow, that's cool. Yeah, I might need Starlink, right? All right, so one last thing before we jump into the charts. I want to put the links in again for, well, this one is Make Hogue Money. There it is. The first one at the bottom here is Make Hogue Money. The next one will be for mental game of trading with Jared Tendler as soon as it pops up here. Of course, because I'm in a hurry, it's going to take its time. There we go. And there you go. So on the bottom here, first link, Make Hogue Money. Second link, mental game of trading with Jared Tendler. 10 o'clock today. Should be a good one. All right. Let's jump into the charts here. As the week goes on, markets seem to get thicker. The information seems to get thicker. The plot gets thicker. Everything gets thicker. Let's take a look on the S&Ps on the daily here. So we had a failed breakout outside of balance last week. Okay, the failed breakout brought us back into balance, and yesterday I believe we reached our kind of measured move back to the low end of this area of balance. We traded down to it yesterday, weekly kickoff low, didn't spend a lot of time below it. It's kind of funny. It's the volume point of control from yesterday's regular trading hour session. We'll see that shortly here. We added 15,000 in open interest. Finally, we added open interest on the downside here. But when you look at this on the daily chart, this looks like excess, doesn't it? Looks like excess. We're still waiting for some really serious information and some very, very serious things to happen. Seems that equities, traders, investors have forgotten about that. We can't do that unless they know something we don't. Okay, so now we're really just kind of back into previous balance here. Probably going to be shorter time frame controlled until we get some information on the debt ceiling thing. Weekly kickoff low 41.20 is pivotal, supportive overall. Yesterday, take a look at this on the 30-minute chart. So this was yesterday. It's a B-shaped long liquidation profile, but we added open interest. So the B shape is not supported by that open interest. It seems we may have trapped some sellers down here with the volume point of control being exactly at 41.20 weekly kickoff low, last week's low. And then, when NVIDIA came out, the NASDAQ went nuts, so that kind of dragged us up with it. Well, this morning we're looking at some overnight inventory that is certainly looking to the long side. We're going to be opening with a gap. So if we're going to trade what we see, if we can't close this gap this morning, then we're going to be looking towards the upside for opportunities. It seems kind of strange to say that, but as long as nothing bad happens, the equities tend to kind of grind to the upside. We're still pending some information, and of course we have, what Kevin was pointing out. We're looking at income and outlays, some more important information as far as economic numbers are due out tomorrow. So there is quite possibly a repair play back to the upside for us here. Gap rules, right? Gap rules. We're opening with a gap from yesterday. We're opening with a gap from this low here to this low here. We're creating another island low here. We had an island low here. So we're kind of creating another reversal signal here. Look at the TPO charts. So here's our island low here. Okay, market gapped lower and then gapped higher. Well, we just created another one. If we don't close this gap today, we've created another island low. Now look at the profile from yesterday. Normal variation, B shape, indicating possible long liquidation, but not supported by open interest. the volume point of control is directly on the weekly kickoff level. It happens sometimes. You use that, you probably got a little bit chopped up yesterday. There was no real decision made yesterday. Not sure we're making any decisions today either, but we have, a double distribution trend day that has not yet been reconciled or repaired. Look at where we're going to open. It looks like we're going to open between an assumed point of control in this distribution and an assumed point of control in this distribution. So that quite possibly could bring us into a repair to the upside. We have to remember, Anissa, that we have a weak high here. We also have a recent high that occurred in the overnight session up here above that unfinished upside auction. So these are upside targets. If the market just continues to rally, those are levels that we'll be looking for. That who knows what the probabilities of that are with the current situation. We've got to trade what we see. This is a composite profile that goes back to April 1st. Look at our low yesterday. We were at the low of value. Well, it looks like we're heading back to the high of value, which is only 41.75. It's 10 points higher than this. Just wanted to kind of show that we're still really kind of range bound, even after, failing to continue up here. We got weak low, we got weak high, just a very kind of relatively even bell curve here. What else do I have here? Normal variation, IB extreme, no. But potential for repair to the upside here, that is entirely possible. We could even repair down to here and up to here. I don't know what's going to happen. There's so much information coming at me this morning. I'm just going to see what happens. I'm going to trade what I see. Be patient, look for good trade locations that offer asymmetric opportunities, and hope that I end the day better than I started it. Not really what I was looking for here, but there's so much. The plot is so thick, it's difficult to choose, right? So be patient. If you find yourself spinning, the best thing to do is stop and then wait for something to come to you. Here's the crude oil. We added 18,000 in open interest on this push to the upside yesterday. The Russian comment pushes price back to weekly kickoff high. That may end up actually really being a decent opportunity for support if we get the opportunity here during the regular trading hours. But we've seen open interest increase for 3 straight days. 1, 2, 3. The upside auction breaking out the day before yesterday, seeing some continuation and increase in open interest. Volume is, of course, increasing because we just got out of rollover. The auction to the upside was actually doing pretty well. The Russian comment put a little bit of a kibosh on that, but I like the fact that it's found at least support near weekly kickoff high here, which is 72.90. Got pretty deep through it in the overnight, but it might give us an opportunity to limit risk at that level if we get to it in regular trading hours. But of course, the short time frame upside structure remains. Here's the 30-minute chart. So, overlapping to higher range, outright higher values says, we saw buyers come into this market holding price higher. Overnight inventory is short, up against an inflection level. We don't have a gap. So if we bring price back down to this level, it looks like an interesting spot to take an execution. Upside structure remains in short time frame, very short time frame. Downside structure is now an issue. Probably look for an opportunity down here near weekly kickoff low if I'm going to do anything here. And that's just my primary hypothesis for today. Here's the TPO chart. open, overnight inventory short. There is a small gap down here. Points of control lower, point of control higher from yesterday. Really kind of centrally located inside of this 3-day rally we've got going on. So I'm going to see if we bring in new business below the low from yesterday. Our overnight low also looks kind of interesting. And then, of course, 42, 72, 90 weekly kickoff level also looks interesting. Look at the NASDAQ. NASDAQ is looking at, well, there it is. I think it just took out that overnight high. So the NASDAQ is just beaming, right? Did NVIDIA do all of this? Look at the excess low we put in yesterday on the daily chart. It's even a bullish piercing pattern for those of you who follow candlesticks. So this is a bullish piercing pattern. That's a good reversal pattern, right? Open interest higher, 2,500 contracts higher, volume higher. All right, this could be something, right? The NASDAQ does remain the strongest with the upside structure. S&Ps are back in range. NASDAQ now looking like this was a upside digestion and possible continuation now to the upside. Seems strange to say. Here's the 30-minute chart. So here's the range yesterday, adding open interest, maybe even to the downside, but I would say that by the looks of this, the way the market finished the day, I would say we have some new longs in this market, right? So we've got the gap. We've got quite a gap. Look at where we are. We are ready to take out this recent high that took place in the overnight session. We're pretty far from that in the S&Ps. We're already there here in the NASDAQ. It's going to be a wild day, it seems. I'm hoping that there's an agreement that's reached and we can get past this and we can continue this push to the upside. We don't know what. Yes, the Dow does seem the weakest right now, right? It's probably the slowest moving, but trading research, chart language. No, it's not under indicators. It's a chart type. Okay, so what you want to do is you want to go up here. Don't go to legacy chart, go to chart. Open up a chart, and then you'll see on the chart type, candlesticks, bars, lines. At the bottom, you'll see TPO. Now, if you want more information on how to change that to make it look like mine, chart language, come to group coaching today and ask that question. I'll have more time to go through that with you then. But it's not on legacy charts, it's on chart. And then you'll have the ability to change it to a TPO chart. Not here, not in indicators. Not in indicators, it's a chart type. All right? All right, let's take a look now into gold, which really saw a pretty steep dive here after the numbers came out. We were holding last week's low. We held it on, Tuesday. Got relatively close to it on Wednesday, and now we've broken down through it. I'll be looking for this move to take us down to weekly kickoff low. Now, sometimes when there is an old trend line that crosses one of these inflection levels that are the weekly kickoff level, they become magnetic.